Hello, everyone. Thank you for joining this live Q&A with myself and Colin Foreman here in attendance. We'll be taking your questions and also giving a couple of slides on our views of the conflict and the current situation. We're just waiting for everyone to come on and join the live channel. And so we will wait another couple of minutes and then we'll begin. In the meantime, if you have any questions for us, you can start entering them into the chat box and we'll do our best to answer them later on once we've gone through our slides. Thank you. As I just said, we're just waiting another minute or so for everyone to join, and then we'll begin. Okay, so I think we'll start now. First of all, good morning to you all. Thank you very much for joining. My name is Edward James. I'm the Head of Content and Research at MEED, and with me today on this webinar and taking your questions is Colin Foreman, the editor at MEED. We'll be giving a very quick couple of slides on our view on certain economic project elements of the situation, and then we'll be taking any questions that you might have. This is being streamed live on YouTube and also being recorded, so that it will be also uploaded to YouTube in due course, and you'll have an opportunity to watch it again. And as I said before, if you have any questions, do please put them into the YouTube chat box and we'll do our best to answer them. Right, so without any further ado, let's move on. Colin, over to you and your thoughts on the impact on the projects market caused by this conflict.
Thank you, Ed, and hello, everybody. I think just to start off, I'll just give a quick overview of the projects market and really what's at stake in the GCC. It's a very active capital expenditure projects market with a lot of local, regional and international companies engaged on multi-billion-dollar projects. So in terms of how much is at stake, it's $951 billion, close to $1 trillion worth of projects that are currently under execution. So that's things that are actually being constructed on site at the moment. And according to MEED projects, that's spread across 6,738 projects. So a vast number of projects and a very high total value. Speaking to people last week and over the weekend that are working on sites, the vast majority are operating as normal. There have been some sites where they've been requested to stop work due to security concerns, but the vast majority of sites have been operating since the conflict started on February the 28th. This has affected the UAE mostly. However, I think one comment I would make on just what sites have been impacted the most, they tend to be sites that are in strategic locations, so things that are close to key oil and gas installations or port facilities, for example. So that's really the short-term impact so far. And the expectation is that due to solid air defences and really the impact so far being from debris rather than direct strikes, that status will continue. However, there are some other things that need to be considered in terms of emerging risks and market shifts. Perhaps, obviously, the most important one, which is at the front and center of a lot of construction companies' minds, is supply chain delay. We've seen the Strait of Hormuz declared closed by the Iranians, and that's having an impact on shipping. This is something that's already a concern, and there's an expectation that there'll be cost inflation caused by that, and also the rise in oil prices, which has gone well over $100 a barrel in terms of Brent crude prices over the weekend. So that's going to be inflationary. So we've got a supply chain disruption and inflationary environment going forward. There's a lot of talk about what that means in terms of contracts, a lot of debate as to whether this is a force majeure event. We've seen a lot of oil companies now across the Gulf declaring force majeure in terms of oil shipments, as oil shipments can't be made due to shipping problems. This doesn't seem to be the tactic that people are taking on the construction project front, and it's more of a softer approach where they're saying that there has been a disruption event and it could have cost implications and delivery implications later on in the line, further down the line. One interesting trend that we have noted is that there has been a little bit of a push to award some contracts. While this might appear a little bit counterintuitive at first, it seems that the rationale is that companies want to lock in resource now before this cost increase or availability issue becomes more prominent. So we have seen a little bit of a contract award period over the last week due to the conflict that's going on. Longer term, which we'll come on to in the other slides, there's then questions about which sectors are the most exposed and which sectors will perform the best. And we'll move on to that onto the next slide. As you will be aware from watching the news, the UAE has borne the brunt of the strike so far in the GCC, and perhaps the most high profile in terms of international exposure is the Dubai tourism market and also the Dubai real estate market. The Dubai real estate market has been performing incredibly strongly since the COVID-19 pandemic, and it's one that's seen significant price increases over the past 4 to 5 years. So this conflict has come at a time where prices were already considered elevated, and many were forecasting some concerns over oversupply this year. Anyway, we now have a conflict situation which is putting even more uncertainty into the market. I think my overall comment on this at the moment is that it's too early to tell. We've seen some transaction numbers come in over the past week from Dubai Land Department. They have been lower than they were in the weeks previously generally, but it's still too early to tell whether it's going to be a long-term impact, whether it will be a short-term impact. And we did see some project launches last week as well. I think the concern going forward will be whether new people will come into the market and invest in property. I think the overall mood in Dubai has been one that has been fairly confident about the UAE's ability to weather the storm. I think the more interesting question is the international perception. Dubai in particular, but the UAE in general has been very good at attracting people to come to the UAE over the last few years, particularly high net worth individuals who are attracted by a low taxation environment, easy to invest, and quality of life. And whether the UAE can continue doing that in the future will be a key question for the Dubai real estate market. Next slide, Ed.
Thank you, Colin. I'll take this one. So yes, so with some interesting analysis there on the projects market overall and Dubai real estate. But of course, the region is a lot more in terms of other sectors and other incidents and implications as a result of the conflict. Now, you can see here the impact on power and water infrastructure in the GCC. We're all very aware that the region is highly dependent on desalination, and there's been some concerns, some issues raised about the threat to desalination facilities in the region. The Iranians have been talking about an attack on a small desalination plant on Keshim Island. We're not really sure the details of that, and there hasn't been much information on it, but of course it has raised some concerns about any potential attack on desalination. But it just puts into focus just how strategic and important desalination facilities are in the region, of course, as well as power plants too. Now, we have a range of gas-fired thermal, nuclear, and renewable energy facilities across the region. Most of them are dotted around in very different strategic locations, making it hard to target many of them in bulk, likewise the desalination. And the expectation is that there won't be any deliberate targeting, or major deliberate targeting of utilities at this moment in time. Of course, that might change, but at the moment, it does appear that both sides are refraining from attacking utility infrastructure, at least for the time being. But clearly, this going forward is going to be something that governments, when they're planning their future power and water projects, will obviously need to take into consideration. Indeed, they have already in the past, but again, it will put this into a clearer focus about how they handle future capex on such projects. Just a reminder, although this webinar is being recorded, and you will have an opportunity to watch it again on YouTube when it's uploaded. We are going to take some questions. So if you do have any questions to ask, please put that into the comment box, and Colin and I will answer them in a couple of minutes' time. Right, similar impact on the oil and gas market. Obviously, it's well known that a large chunk of oil and gas production in the region is sourced from the Gulf. I think something like 20% of all the world's global oil supply and a large portion of its gas supplies flows through the Straits of Hormuz, and so closure of the strait and attacks on some of the oil and gas infrastructure has understandably resulted in an increase in oil prices above $110 a barrel as of this morning. The straits do seem to be closed. There have been some attacks on vessels that have sailed through the straits now, and there is evidence as well that the Gulf states are having to start stopping oil output because they've run out of storage. Most of the GCC states, the major oil producers in Saudi Arabia and UAE now have other export pipelines and outlets, not through the Straits of Hormuz. For example, Saudi Arabia has long had the pipeline through to Yanbu and then on into Egypt. So it's got an export outlet there. The UAE a few years ago built a pipeline to Fujairah. So some of the oil capacity produced in Saudi Arabia and UAE doesn't have to flow through the Straits of Hormuz. Kuwait, though, is stuck. It doesn't have any other outlets, so it's not able to export. Likewise, Qatar and its LNG program, it has had to also stop and announce force majeure because it cannot produce or export its gas production. So there is going to be some limited exports from the GCC, but certainly nothing like its nominal capacity levels when the Straits of Hormuz are opened. Likewise, Iran produces around 4% of the world's oil. It also can't export in the current situation. So it's very difficult to see a relaxation of oil prices or resumption of normal activity until the conflict is over. And I think for many people globally, certainly many countries and maybe in the Washington administration, the oil price and soaring prices at the petrol tanks and the gas stations is going to be one of the major consequences of this action, and also one of the major drivers for potentially a quick end to this conflict. Another major impact that we've seen regionally, and obviously an emerging one and a very fluid one, is the attacks on the Amazon Web Services, Amazon data centers. 2 have been hit in the UAE, and I believe 1 in Bahrain, potentially 1 in Kuwait. Amazon has did announce last week outages, and that resulted outages as a result of the attacks, particularly on the power supply to these data centers. And as a result, some web services, some Amazon software services, some government services were hit, and the service provider or the users had to change their server providers and server locations as a result. If you look at, say, Kuwait, quite a few government websites have been down since the attacks, and it just puts into focus, both for the private sector and government, the importance and criticality of these data centers. From a project perspective, it may well mean that going forward, there is a rethink about how these especially large-scale data centers are delivered and built. Potentially, there might be a push for more data centers to be built underground. That's going to have impacts on cost and cooling systems and other construction considerations. There may also be a way, maybe a rethink of contingencies, power supply, emergency backups for these data centers, and of course the location of them, especially for the 200 megawatt plus hyperscale data centers where they cannot be hidden. Everyone knows where they are, and obviously they offer a strategic threat. So something that's going to change most likely as a result of this conflict is how data centers are going to be delivered. So that's just a few thoughts that we have on the projects market and some of the emerging implications. We'll now take some questions from you if you have any, and if you do have any questions, please put them into the comment box. So I'm going to stop sharing now, and we'll take a look at the questions. Colin, are there any that you wish to answer?
Yeah, the first question there is one on force majeure. As I said, that the energy companies have, not all of them, but some of them have declared force majeure in terms of their deliveries. I think there's 2 things that we need to talk about, and the question refers to that. It says, how does that affect suppliers and contractors? I think what it means is that there has been a basis that there has been a force majeure event has occurred. It then will depend on the contractor or supplier's contracts as to whether they want to go down that road or look at other means of dealing with their contract. So it will depend on the individual contract, but I think what it does do is it says that the country or the national oil company has confirmed that there has been a force majeure event occur.
Great, thank you, Colin. I see also a question here about insurance cover, and yes, of course that's the major issue. So even if a shipping company wants to take the risk of shipping crude or any other product through the Straits of Hormuz, of course they won't have insurance. The insurance has been withdrawn as a result of the conflict. Now, the US has said that it's going to work to ensure, to provide insurance for these vessels. But regardless, I think even if it was to do so, and even if it was to provide protection, there's no real way of being able to prevent attacks through the Straits of Hormuz. So regardless of the insurance or the protection, there's still too much risk, I think, for shipping firms to do that. I mean, there is talks of Iranians, for example, allowing Chinese vessels to go through because China is the biggest customer of Iranian crude. But it's a very fluid situation, and at the moment, it doesn't look like vessels are being able to use the straits, even if the US says it's going to protect them, and even if it says there's insurance. So we are in a situation where there is almost nothing going through the straits, and therefore there is almost none of the production of crude or gas produced in the Gulf states exiting or being exported, apart from the limited pipelines that Saudi Arabia and UAE have to Fujairah and to Yanbu. So this really is a result of, one of the causes for this big spike in oil and gas prices, and it's difficult to see a solution to that without the conflict ending. It's also worth noting that Iraq also is not being able to export neither through Turkey or through the Gulf Coast. So we've also got a loss of Iraq's oil and gas output too, which is also hindering the situation. Colin?
Yeah, just a reminder to everyone on the Q&A, if you click on refresh on your page just to get it refreshed. There's a question there about which sectors are the most exposed. A long discussion there, but I think I already mentioned real estate during the slides. I think the other one which is important to add to the mix is tourism. Obviously, tourism will be significantly impacted as airports are closed or offering limited services. Hotels, unofficially, if you speak to people in the market, are already operating at very low occupancy rates. So I would imagine tourism is going to be the most immediately impacted. In some ways, you can view tourism as short-term real estate. So that maybe gives you the linkage there between tourism and real estate. What does that mean for projects? I think it's probably going to mean that while projects that were already committed will continue, I think any new investment decisions to be made will probably be delayed until we wait and see what happens. Perhaps, and this is in the realms of speculating a little bit, but if the tourism market is performing badly for a prolonged period of time, what we have seen during previous downturns is that owners use it as an opportunity to refit and refurb. So there's potential there for some refit and refurb work. And I do know of some high-profile hotels that were looking at a refurb anyway. So that could be something that materializes further down the line.
Thanks, Colin. I've got a question here on the global supply chain, the impact. Obviously, a lot of products, whether that's, we're talking about oil and gas outflows from the Gulf to the world and the Straits of Hormuz being closed. But of course, the Straits of Hormuz closure also affects imports, whether that's food or construction materials or indeed any other product, cars or clothes or any kind of material imported into the region. Of course, we know that the region is quite import dependent. So there's going to be some impact on that. We do know, of course, that the UAE especially has invested a lot in port facilities and the ability to get a supply chain from outside the Straits of Hormuz, from Fujairah and Khor Fakkan. So it's no doubt utilizing those. Of course, it can also import from Sohar and Salalah ports. And indeed, one of the reasons for building the Hafid railway between Oman and Sohar port is for exactly this reason. And of course, the Etihad railway as well from Fujairah port. So there are alternative import channels now, but of course, Fujairah port, Sohar don't have the same types of capacities as Jebel Ali and Khalifa port. So there are inevitably going to be some impacts. The UAE is long prepared an emergency plan for food imports and created greater food independence as well for such a situation. So the region is a little bit more insulated than it might have been a few years ago. Likewise, Saudi Arabia has the Red Sea ports, which remain open, so it can import what it requires from there. But it's going to be creating some delays and expenses on the supply chain. Probably a little bit more worrying for somewhere like Kuwait, which is a little bit more exposed in this regard, potentially also Bahrain and Qatar. But there are contingencies in place. That said, of course, the supply chain is going to be affected. We've seen it before with the Red Sea closure, the impact on the projects market with delays on materials. And I guess it's inevitable as well that there will be some impacts, no matter how mitigated they are. I don't know, Colin, whether you have any thoughts on construction project market impact as a result of any potential closures to Straits of Hormuz and construction materials?
Yeah, I've heard early comments that there has been supply chain disruption already. My sense is that will be for some specialized items that were due to be delivered. So it would be something that was maybe being flown in or stuck at a port, which is an item that you can't replace. I think for basic commodities, there's not so much of a concern as we sit at the moment. One of the questions in the chat is referring to steel. I don't think there's a shortage of raw materials at the moment, but I am starting to hear signs at the beginning of some specialist items that have been ordered that have been delayed. So I imagine that's a leading indicator for things possibly further down the line. I think on the broader question of generic materials and proceeding with construction, I think really, and this probably applies to everything, is it really depends on the length of the conflict. If the conflict drags on for a long period of time, then we're going to see a prolonged period of disruption. If it's over fairly quickly, then supply chains, as we've seen, have been stressed quite significantly over the last 5 years and have managed to bounce back. So it really depends on the length of the conflict. But yes, I am seeing the early signs of supply chain disruption happening.
And do you think that will impact construction costs?
Yes, it will impact cost, but also impact time. It will mean that projects are delayed, and that will impact costs. So yes, it will be a challenge for the industry to digest.
Okay, Connor, I've got a question here about the wind resort in Marjan Island in RAK. Do you think it might affect the development of that project?
I mean, I don't know the specifics of that project, but if we just talk about projects that are on site and being built at the moment, really, what's the issue going to be? The issue is going to be whether the developer decides to continue proceeding with the project. If you've got that in a project like the wind that's already well advanced, it would be a major loss if you decide not to continue with the project. So I think it's past the point of no return. It will need to be delivered. So I don't expect that to be an issue. I think something like the wind, which is a high-profile international project, is probably reliant on an international supply chain more than, say, other projects that are relying more on a local or regional supply chain. So there will be potentially some supply chain disruption there, or maybe a slightly heightened level of supply chain disruption given on the nature of the project. But again, I don't know the specifics of that project. Perhaps another interesting thing to consider is what we see happening with finances and whether loans and banking facilities that have been extended to people in the region are still able to be used. We've seen some reports coming out of banks in the Far East not making some facilities available to people in the region due to the conflict. I think that's probably not going to happen, but it's something that there has been some reports on, and it is an interesting thing to watch, because ultimately, if finance isn't available, then projects stop moving.
I've got a question here about whether oil and gas clients in particular are going to delay award decisions or investment decisions. So logically, their question says it appears they would do. I think certainly a final investment decision on a multi-billion-dollar project is likely to be delayed. After all, a delay of 2-3 weeks to evaluate the situation is no big loss. It makes sense entirely to just wait out to see before making such a decision. Of course, also finances, banks are also unwilling to maybe commit to financing projects at this stage right now, with everything going on.
I think you also need to look at things from their perspective. If you're one of the oil companies, your priority at the moment is making sure that your existing operations are safe and continue operating. So I think a lot of the senior management time will be devoted to that.
Yeah.
You've then got an issue with about whether you have storage capacity, whether you're able to make shipments. I think the oil companies have got much more pressing concerns at the moment than making investment decisions on projects. And then what you just said comes into play as well. So
exactly, yeah, exactly. I mean, you will wait. I mean, in terms of awards, though, perhaps not in the oil and gas sector, but in the construction sector, if Colin, you and I were talking about this, there have actually been some contracts awarded, quite significant contracts awarded in the last week, if I'm not mistaken.
Yes, I think well, that is the case. There have been contracts awarded. I think as the situation drags on, we've had 1 week of 1 week of conflict. It's now moving into its second week. It'll be interesting to see whether that's a long-term phenomenon or just a something that's carried on very quickly from decisions that were made before the conflict started, or snap decisions that were made just to lock in some resource. So I think while that is the case, I think it's too early to say whether that's business operating as normal. And then there was a question there that was asking about whether the business as usual narrative starting to crack. I think that's quite an interesting question conceptually to ask. I think what we're seeing is that the region's saying that business is able to operate. There haven't been major direct hits, for example, which have knocked out businesses and meant they can't operate. I think the more nuanced question is whether businesses will be able to continue as usual as demand or some of the business factors start taking hold. So I think for the moment, yes, it is business as usual, but if you just go around town, you'll see some places are more quiet than normal, and it isn't business as usual. But in terms of being open to operate, yes, it is business as usual. Is the market operating the way it was 2 weeks ago? No, it isn't. So it really depends what question you're asking.
Certainly does, yes. And then we've got questions, or a question here on events, the impact on events, as we know, well, the UAE in particular, but also Saudi Arabia, they've now much focused on these big world-scale events such as Arab Health and GITEX and Big Five and so on. These are big global events, and of course, there's a chance that they will be impacted. We're of course in Ramadan right now, so there aren't very many events, but there are going to be some planned in April, May. If the situation continues, then they're going to have to be postponed. So that is going to be a big casualty, no doubt, of this conflict if it doesn't end soon. And I'm aware already of several events having to be pushed back until the Q4 already as a result of the conflict. Clearly, no one is coming to the region right now, and a lot of these events are based on international visitors. So it doesn't make sense to proceed with them at this moment in time. So the events sector is certainly something that hasn't been impacted just yet, directly because it's Ramadan. But if the conflict goes on much longer, then yes, we are going to see cancellations and a lot more postponements. I've got a question here about food security and the risk for that. So we saw with COVID, and then we saw with the Qatar blockade. Countries very much understand the risk to food supplies. The region is very much food import dependent. There has been a lot of moves to try and create strategic independence for food imports and food supplies. So there are measures in place. You'll note that a lot of now dairy and meat, poultry products are now made in region. There's also been a big push to have fruit and vegetables also built or planted and made available in region as well. And of course, there are contingency supply routes from outside the Straits of Hormuz into the region. So I don't think, and certainly looking at the shops and supplies and shops, it doesn't appear to be a shortage of much right now. So those contingencies and mechanisms are in place. The government has said those mechanisms are in place to ensure steady supply. So I don't think there's any cause for alarm at this stage. So those mechanisms that have been put in place over the last decade have been put into effect and have resulted in good food security as it stands right now. Colin, is there a question you want to answer?
Yeah, I think just to add to the food security before I move on to another question, I think it does strengthen the argument for overland transport networks in the GCC. If you can move critical goods such as food across the GCC from further north, where you tend to have more agriculture, that is something that is obviously a massive positive. So I think it strengthens the strategic business case for some of the overland transport links that we've been talking about quite a lot over the last 5 years. There's one question which I've been having this debate with a few people about whether we expect an increase or new taxation after the war. There's really two ways to look at this. I think one, there's obviously been a lot of cost that's been absorbed in terms of the conflict, and that's something that governments may want to balance out by raising revenues in some form of taxation. That's possible. I think the other way to look at it is that the selling point of the region as a place for people to come and operate businesses has taken a shock. And I think the region will be very keen to promote itself still as a place for business and people to live. And increasing taxation would probably further damage that offering at the moment. So my personal view is that it's unlikely that we'll see more taxation. I think that in some ways we'll see the opposite. I think we'll see a lot of initiatives try and encourage people and business to continue operating from the region. And if we saw over the weekend, it was quite interesting. We saw, this is a very UAE-based comment, but we saw Sheikh Mohammed bin Rashid meeting with Sheikh Mansour bin Zayed. Didn't really give too much away in the statement, but they met, but it was talking about how progress on development projects is going and how they keep the UAE at the front of being a global destination for business. So I think those sorts of things are already being discussed in terms of how they maintain their position globally in terms of a place of commerce. So I think the UAE will emerge from the conflict as somewhere that's trying very hard to maintain a position it's worked very hard over the last couple of decades to achieve.
Yes, absolutely. And it has proven itself very resilient in the past, whether that's in 2001, 2009, COVID era. The UAE, Dubai in particular, has bounced back always very quickly. And I would expect, correct me if I'm rude, I don't know if you agree with me, Colin, but I expect it to be fairly similar this time round. I do think the region is more resilient than ever. And I think it will be able to recover quickly as a result after this conflict ends. And I also agree, Colin, that it's going to put more emphasis, I think, on GCC transport interconnection, particularly railways. You know, whether that's a new railway from Jeddah to the Gulf Coast, for example, whether it's greater connection with outside the Strait of Hormuz into Oman. I think this has shown that there's a need for greater connectivity of industrial and freight and cargo between different countries for exactly just this kind of situation. And I think that's made that clearer than ever before. Right, question here about oil barrel, 400 million barrels being released by the G7 and the IEA. I think clearly, if there's one thing that's going to impact the US position, because it hits US population hard, is very rapid soaring oil and gas prices. The Americans will feel it in their pocket when they go to the gas station to fill up their cars. $110 a barrel is a steep increase on where it was, $70 or so where it was before this war. And if that's going to be sustained, then it's going to create real economic pressure. You've already seen in countries like Korea and Japan very sharp falls, 10% a day, for example, in Korea, which is highly dependent on imports of energy from the Middle East and generally speaking, Japan as well, China too. There is going to be an economic impact. So there is going to be pressure as a result of these soaring oil and gas prices for the US to either bring an end to the conflict or find a resolution to that. Releasing the reserve will help. But clearly, if oil and gas facilities are going to continue being damaged in the region, if there is going to be restrictions on exports and that continues for longer, then the release of these emergency reserves might help in the short term. But if this carries on for a few weeks, then there's clearly going to be a continuing increase in oil and gas prices and a continuing negative impact. And that probably more than anything else is going to be one of the deciding factors for when the US and Israel decide to bring this conflict to a close. Colin, anything you want to add?
No, on the ore barrels, no. Interesting question there on marine and coastal projects in the region. I think that the region, a lot of its major cities are based on the coast, and a lot of the development centered on the coast. So I don't think there'll be a case for moving development more inland due to security concerns. So I don't see that. I don't see that being a major change. And I think if you look at some of the more tourism-related developments, obviously beachfront and sea views are very important, and I don't see that being something that changes, particularly in that if we look at what's happened over the past week, it's not really been just places along the coast that have been impacted. It's the missiles and drones have reached places quite far inland, so I don't think that will be a significant factor going forward.
Okay, thank you, Colin. I don't think we've got any more questions. Thank you very much for asking them. We've had more than 300 people join us today. So thank you very much for that. I hope you found that insightful and useful. We'll be doing these again a few times over the next coming weeks. So keep an eye on the MEED LinkedIn page and on YouTube for the alert on these next live sessions. And we'll be taking more questions from you all. This is being recorded and will be uploaded to YouTube, so you'll be able to watch it again in your own time or share it with others. But for the time being, stay safe. Let's hope the situation eases and ends soon. But Colin and I, in the meantime, will be back again later this week with another live session and hope to see you all then. Thank you very much. Bye-bye.